debt versus equity. Yeah? Debt versus equity. Okay. So how do we classify whether it is a financial liability or equity instrument? Okay, now class, when we classify, we have to base on the substance of the instrument rather than its legal form. Okay, we have to base on the substance of the instrument rather than its legal form, conceptual framework. Okay, now class, what is the meaning? Now, when we say substance of the instrument rather than legal form, now this is the meaning. Just now I asked you, preference shares, debt or equity? Class, you cannot tell me, oh, Spencer, share, it's equity. That means you are doing on legal form. You just look at the title and you classify it based on that. That is called legal form. You are wrong. Okay, you are wrong. We have to base on the substance of the instrument. That means the characteristic, the nature of the instrument. Don't just look at the legal form. Okay? Now, class, this is how we do it. We ask ourselves, how do we settle for the instrument? Is the settlement in cash? Now, if the settlement is in cash, then you be on the lookout for this characteristic. Do the entity has a contractual obligation to deliver cash? Do the entity has a contractual obligation to deliver cash? Do the entity has a contractual obligation to deliver cash? Now, class, if the answer is yes, the entity has a contractual obligation to deliver cash, it's liability already. Okay? As long as you got a contractual obligation to deliver cash, it's a liability. Class, what is the meaning contractual obligation deliver cash? Must pay. Must pay. Get me or not, class? Must pay. Okay? Now, class, just an example. Just now I said preference shares. I don't know what's the answer. I actually don't know. But if I tell you, redeemable preference share, straight away I know the answer already. My company issue redeemable preference shares. Answer, financial liability. We have to identify debt versus equity. So you see in class the connection, so that we can understand well how your examiner can test you. Debt versus equity. So how to identify debt versus equity? Got two possibilities. Settlement in cash and settlement in own equity instrument. So if the settlement is in cash, class, what's the keyword? What's the keyword? Contractual obligation. Yes. Contractual obligation to deliver cash. Your assistant not sure how to reflect the funding in the financial statement of Paul. He expressed both should logically. Wow. Since when we use logic one? Should be reflected in capital. Now class, when they say reflected in capital and reserve, means what? He classify as what? He's going to classify as what? Equity, yes. He's going to classify as equity. He say both should be classified as equity. He justified this as follow. Wow, he got justification. Number one, the preferred shares are legally shares. Now class, see the word they use. Legally, yes. The examiner is trying to give you a clue how to get marks. The preferred shares are legally shares. Class, that means, what will you use to explain this? Substance over form. Yes, substance over legal form. We must talk about substance over legal form. When classifying our financial instrument, we have to consider the substance of the instrument rather than its legal form. He's wrong already. I will remind him, hey, hello, you are wrong here, okay? So the preferred shares are legally shares. So equity is the correct section. I think his reason is unacceptable. Then what he say regarding the second one? Answer. Contractual obligation to deliver cash. An instrument where an entity has a contractual obligation to deliver cash. Now, if you look at earlier, what we were covering, debt versus equity. You see, class? When you understand the keywords, you just need to put it in proper sentence. Understand, and then you apply, putting it into a proper sentence, and you pick up the marks. So actually, when we learn this is the standard already. You see, and no one knows that's all that you know. Okay, but if someone asks you to explain, class, you can bluff the whole world. You look like walking IFRS. Okay, wow. Let me tell you, financial instrument got 3 types. Trust me, your audience, wow, maybe they only know 1. Someone know 3. Wow, you're already impressed. Then you are using those terms, class, you're using those terms. Okay, to know whether it's debt or equity, there are 2 possibilities. Wow, you lucky know got 2 possibilities. Yeah, class, but actually, hey, your word is like this only, no more, no more. Okay, class, but people don't know, you say. So you look impressive. And class, examiner also don't know that that's all that you know. You look like very smart. You see, your accounting, because you highlight perfectly correct. You see? So what the problem with some students is, you go and read sentence by sentence, the standards, then you attempting to memorize everything, which is not relevant. You have to understand. So when you understand, and then I emphasize you must draw those flowchart. Because why you draw those flowchart, you remember. You understand and then you remember. That's why I ask you to draw. Okay, that's how you learn. Okay. Then you say after you show off, so always remember show off first, because I scared your answer wrong. Okay, so you must show off first, like wow, you're very good. Pick up marks first, and then give your wrong answer. Okay, all right. So no lah, if you got correct, then better lah. All right, but let's be reasonable. Accounting we have to be prudent. Not all the time you can correct one. So now I apply. So the preferred shares must be classified as financial liability because it is redeemable. Okay. So class. So now I give my answer. I say the preferred shares, it's financial liability. Reason, redeemable. Redeemable. Okay? So like from the answer. Redeemable. Alright, redeemable. Then